Today we're going to talk about how to talk to your lender when you're behind on your mortgage. I recognize that can be a very difficult and uncomfortable conversation to have. However, what I found is that having it sooner versus later can make all the difference in the world. So without further ado, let's dive on in and see how we can make that difficult conversation just a little bit easier. Now, why do you think it's important to have this conversation? The truth of the matter is lenders want solutions. Lenders don't want to take your house, which is the outcome of a foreclosure when you don't bring your mortgage current, right? So the lender doesn't want to take your house. They want to come up with a solution, and the only way that they can have an effective solution is by having a conversation with you. What we found is silence really just makes things worse. And I completely understand there is a very human reaction to difficult situations that cause a lot of people to stop opening mail, to stop accepting calls. But by breaking down the communication between you and the lender, that typically makes the situation worse. And oftentimes, there are many stories that I personally have heard of people who would have been able to take advantage of a solution, but because they had shut down all communications, they never became aware of what the possibilities were. And so as a result, they were never able to take advantage of what was ultimately a better outcome than the one that they achieved by not having a conversation and by staying silent. So it's really important. I can't stress it enough, and I get it. It's hard, it's uncomfortable, but it's really important to keep the dialogue open. You can't make blood out of stone, right? So if you can't make the payment, you can't make the payment as structured. But by keeping the lender in the loop and having a conversation, you would be surprised at what could be possible, what could be worked out, what could be deferred. There are a ton of different options which are never going to be presented to you if you're not in communication with your lender. So one of the things that it's really important to do is make sure that you are prepared before you have the call. So what does that mean? What does preparation mean as it relates to the call? Being prepared for the call means that you have to know your numbers. It's really important. Gather your documents, know your loan account number, know the current balance, know the amount that's past due. Write them down so you have them readily available and you're able to have the conversation or start the conversation in a meaningful way as quickly as possible once you get on the phone. It's also important to know what your overall situation is, because at the end of the day, what we're trying to come up with is a plan that can work for you. So for that to be able to be possible, what we have to understand is what your income looks like and what your expenses look like. That's the only way that we can navigate to see how we can arrive at something that's going to be attainable and sustainable over a period of several months or even years to get you back on the right track to be able to keep control of your home. Now, an important thing to do is also be prepared to explain what the hardship is, right? A lot of times we fall behind because of a lost job, maybe an illness or a death in the family, something that has affected our ability to pay. If that is your case, make sure that you are able to articulate that in a very clear and understandable way. And what would also be a good idea would be to talk about what has changed that is going to put you in a position to get caught up and to not continue to be in the situation that you're in. So for example, if your situation is that you had hours reduced on your job and so you're earning less, but you've been able to go out and get a second job that's bringing in comparable income, then that is a one-time hardship that you have corrected through your own actions, and now you're in a position to be able to come up with a workout with your lender because your situation has changed. Also, a good idea is to have a timeline, how much time you actually think you're going to need to recover. If you owe X $1,000 in past due amounts and you are able to pay an extra $500 or an extra $1,000, whatever that number is, be able to talk about what the timeline would be for you to get back on track, so you can give the lender an idea of where you are and what it is that you are hoping to achieve. As I said earlier, the lender does not want to take your home. They want to make sure that their debt is being serviced. In other words, the mortgage is being paid, but they're not trying to take your home. That will be more work for them than it's actually worth. So the goal is to make sure that we come up with a solution where your property does not go into foreclosure. All right. So what do you say when you call? It's important to make sure, and I touched on this earlier, that you go over the fact that you're experiencing a temporary hardship due to a specific reason: loss of a job, death of a loved one, illness, unable to work, whatever the situation is. Make sure that you're able to articulate that. Make it clear to them that you want to keep your home. You're committed to being in your home, and you want to come up with a workable solution that will get the bank back on track, get the lender what they're due, and then put you in a position where you're able to sustain. And then ask specifically, what are the loss mitigation options that are available for my situation? You've articulated what the hardship is. You've talked about how you're recovering. Talk about, based on that fact pattern, based on the information that I've provided to you, what are the loss mitigation options that are going to be available to me? Once you have that, now we can have a meaningful conversation between you and the lender about what the real options are. Really important to make sure that you're writing everything down, so that once you get off the phone, you would have an opportunity to really think through what the best options are for you and to make the best decision. There are some things that we don't want to say when we get on the call. While the lender is not interested in taking your home, they're also not interested in having a non-performing asset on their books. So don't start the conversation by, I can't pay anything. Especially if you haven't paid in the past, you definitely want to be able to come up with some type of payment plan, some type of payment schedule. If you start off with, I can't pay anything, even if it's true, that shuts the door down. There's nowhere to go from there. So definitely don't say that. I'll get back to you later. That's if they call you and you're not looking to try to have a meaningful conversation. I'll get back to you later. That kind of gives the impression that you're trying to avoid the situation. If you're not in a position to talk right now, which is very possible, say, would it be okay for me to call you back tomorrow afternoon at 2 p.m. so that they know that you're serious? Getting back later is open-ended. It's very ambiguous, and so they have no idea as to whether or not this is real for you, if you're serious about this or not. So make sure that you have a specific time that you're going to make contact so that you appear serious. And I'm ignoring the problem. I can't imagine a circumstance where someone would want to say that, but that would not be a good thing to say. Again, your goal is to show the lender that you are serious, you're committed, you want to do the right thing, and you want to stay in your home. If you hit all of those points, there will be some resolution that could be had. I'm not saying it will be the best resolution, but there will be some resolution that can be had. And certainly whatever that resolution is, it will be better than not communicating at all over the period of time, because that will ultimately lead to some type of foreclosure situation, which will have negative impact on so many things: your credit, your equity position. It's a loser everywhere that you go. So that's what we're trying to avoid. Some questions to ask, and these are critical. Ask if you can get a loan modification. Is a loan modification an option for me? Is a forbearance available? Can late fees be waived, and what documentation do you need? A forbearance is a little bit different from a modification in that a forbearance is a temporary pause or reduction in the payments, where a loan modification is a permanent change to the terms of your loan. So say, for example, you had a loan that was at 6% and you're now able to get a modification where the rate becomes now 5% for the remainder of the life of the loan. That is a modification. It's a change and it's permanent. However, if you got a forbearance, it might be that if you make a payment of a specified amount, say $1,500 a month for the next 3 months, then we are going to, which is less than your mortgage payments, then we can work out this particular scenario to bring you back in line, and they can work out a plan. the forbearance is temporary. Your mortgage will not be $1,500 for the remainder of the time, but what it will do is it will give you a chance to prayerfully catch your breath and be able to work through the plan to get caught up. I'll always ask if late fees can be waived. Maybe not all of them, but any dollars that you're able to save is a check in the positive box and a positive column. So always ask, can the late fees be waived? And ask what documents are needed so that you can have everything gathered together and that you can submit it. One of the things that really slows down modifications, forbearances, any type of action from the lender is the time frame that you have to give the documents. So a lot of times folks just really don't have their documentation handy, and the longer it takes for you to gather the documents and turn them in is the longer it takes for you to get a resolution and for us to if we're going to be able to get fees waived, late fees waived, or get that new model in place for you. None of that will happen until the appropriate documents have been submitted and that they have everything that they need to evaluate and assess and come up with some plan for your situation. So just keep that in mind. The more organized you are, the more things that you have all gathered together, the better the outcome. Certainly the faster you'll get some type of resolution. And always keep copies of anything that you're submitting. Most of the submissions these days are digital, so you're just maybe scanning and uploading documents. But in the unlikely event that you're actually sending paper documents, make sure that you keep a copy of everything that you send, because there is a possibility that you may have to send it in more than once, just being real, and you don't want to be in a situation where you sent the only copy that you had. So if you're sending them in actual paper format, make sure you have a second copy. If you're not, then no worries, scan it, make sure you hold on to what you sent, keep a copy of the file digitally, and then that way if you have to produce it later on, then it's not a hardship for you. So it's really important at this point to understand what your options are. The first option is a repayment plan, where maybe we spread the missed payments over several months, giving you a chance to catch up. So if you don't have to try to come up with a lump sum of money at one time, you can add that to your existing payment, paying a little bit extra, and over a certain period of time you get to pay off whatever is owed. Another option is it's called a partial claim, where the lender will give you a zero interest loan to pay the back balance, to bring the balance current, and that loan will be repaid when you sell or when you refinance the property. That would be considered a partial claim. The third option that we have here is a loan modification, which we touched on earlier, where they restructure the terms of your loan permanently for better terms, a lower interest rate, maybe a longer repayment period, something that makes the payment more manageable for you, and that is done one time and it's permanent for the remainder of the loan. There's also a reinstatement, where if by some means you're able to pay all the past due balance on the account, you bring the account current, you get reinstated. It's as if you've gotten a bonus or some type of a windfall. Everything gets reinstated. I've seen cases where they've done a reinstatement and added the amount that was needed to reinstate the loan to the principal, and that just gets paid off over the life of the remaining loan. Tons of different options. And of course, as a last resort, if we can't come up with a structure that's going to make sense for you to keep the house, then there's the option of a short sale, or if you have equity, just a regular sale on the property. These are the basic options. In 4 of the 5 options that are presented here, you keep your property. It's important to recognize that. So in all of the options except the short sale, you keep your property. And a short sale would be a situation where you owe more than the equity that you have. And so the bank would have to agree to the sale, because they're not going to get all of the amounts that they need to bring your loan current. But if you have equity, if it's not a short sale situation where what the value, the equity that you have in the property is in excess of what you owe the bank, then you obviously can sell your home, pay off the balance with the bank, and whatever the difference is, you have that to make a new start and to begin again without the burden and the hardship of a foreclosure on your record. So just keep that in mind. Again, action, communication, these are critical things to focus on if you find yourself in this situation, as hard as it sounds, because those are the things that will get you the best outcome, as opposed to just trying to ignore what the situation is. Here's the documentation that you should start gathering if you find yourself in this circumstance, because you will definitely need this to be able to start having a meaningful conversation with your lender. You're going to need recent pay stubs, 2 to 3 months worth, certainly at least the last 2 pay periods. More likely than not, you'll need more than that. You're going to need 2 to 3 months worth of bank statements, tax returns. 2 to 3 years of tax returns are also a good idea to start gathering. Remember, we talked about there was a situation, there was a hardship that caused your particular situation. You want to create a hardship letter that you're going to use to document what the circumstances were that caused you to be in default, to be behind on your mortgage. I know you're going to explain it to the person on the phone, but it's always a good idea to have it written, because that's how it gets conveyed. If you tell only the person on the phone and they put it in the system, because that's how the process works. So the person you're talking to is taking notes, they're talking to you and they're typing. And so what's going to happen, or what may happen, is that they may misinterpret something that you said. They may get some of the facts wrong or slightly wrong. Whatever that is, you don't want that to happen. So document your situation in a hardship letter, explaining the hardship, explaining the steps that you've taken, explaining the help that you're seeking. And that way that will be there in your words, in your voice, to go from person to person. Whoever is evaluating your particular situation will have that document, that conversation that you want to have with them in your own words, readily available within the file. And then, of course, you want to show a monthly budget to show that you are going to be, based on your current situation or based on the steps that you've taken, you're going to be in a position where you're going to be able to make the payments and make this sustainable. What the lender wants is they want to create a sustainable, meaning long-term solution to the problem of you being in default. So bear in mind that is something that they absolutely are going to need, a monthly budget, because they want to see that the numbers do in fact make sense. Okay, understanding your lender's timelines. And this is where a lot of people get very frustrated, because things sometimes take a little bit longer than we anticipate, and it may require you to follow up more than you would like. But bear in mind that at the end of the day, the outcome is for you to be able to stay in your home if that is your desire and that's in your best financial interest. So initially, the first step is that you're going to make the outreach, or you're going to respond to their outreach, submit a completed application with all the documents that they're going to require. They usually take between 30 and 45 days, depending on volume, to review your file and get back in touch with you. So for the most part, for the first 30 days, when you send off your submission, make sure that you make a note of the date. And I would say within the first 30 days, you probably are not going to hear anything. After 30 days, you should be on the lookout to hear from them. If 45 days have gone by and you haven't heard anything, now is the time for you to initiate conversation. Now is the time for you to call and say, hey, I sent in a package, I haven't heard anything, this is my loan number, and basically be proactive in terms of getting the needle to move. In the event that you do hear from them or they leave a message, make sure that you return the calls, that you provide them with the additional documentation. I strongly recommend, I'm a product of the paper generation, so I would keep a notebook and I would make a note of everything that happens as it relates to the file. I sent in the package on January 1st. I heard from them February 15th requesting additional documents. I sent those documents in on the 17th. I got confirmation on the 20th. Just basically keeping a log so that you are able to document what your experience has been throughout the entire process. It's really important, and this is where things break down. You have to stay engaged. This is your outcome that you're trying to manage. You want to make sure that you stay on top of it. You return calls, you provide documentation, and if you don't hear from them, you initiate the outreach. I can't say that enough, because it's better for you to call them and for them to tell you that it's not ready or they're not ready to talk with you, and you can make a note when you're actually trying to plead your case, if that becomes necessary, to say, hey, listen, I reached out multiple times. These are the dates I called. This is who I spoke to. This is what they told me. I've done everything. I've acted in good faith. I need you guys to do the same with me. And then the fourth and final step will be the decision that is made. They'll tell you what your next steps are going to be, whatever the instructions are. If you cannot do them, now is the time to communicate that. Don't agree to a plan that you are not going to be able to keep, because going through the process the second time is more difficult than going through it the first. So make sure that whatever the plan is, you evaluate it, you make sure that it makes sense. If it doesn't make sense, have a conversation, document again what the conversation is so that they know that you're here, you're engaged, you want to do the right thing, you're on top of your game, and this is just a one-off situation where you find yourself behind, but you're financially responsible and you are trying to get to the other side of whatever this particular situation is. All right, you are the owner, you are the captain of this ship. Even though sometimes it may not feel like it, you feel like you don't have any power or you don't have any authority, you are the driver here. So it's up to you. Keep the communication open, make sure that you're being proactive, not reactive, and you will get the best possible outcome. I'm not telling you that it will be your favorite outcome, but it will be the best from the series of options that are available based on your particular situation. All right, now, unfortunately, one of the things that we find in this space is there are a ton of scams. A lot of people are walking around sending out information telling people that they can guarantee stuff and that they need to pay a certain amount of money up front, and just basically bad actors looking to take advantage of people who are in a really rough situation, which is really terrible. What you can do to protect yourself is recognize that there are some red flags. Anybody who tells you that they can guarantee that they'll get your mortgage reinstated or they'll be able to resolve the problem is probably a bad actor, because there are no guarantees. The only people who can give you a guarantee is the lender. So unless they're speaking from the lender's office, not on behalf of the lender, but unless they are representing the lender, there's no guarantee that can be given. And as a general rule, until you go through the paperwork and everything gets evaluated and looked upon, there are no guarantees, right? There's no guarantee that the bank or the lender will work with you. It's on a case-by-case basis. So anyone who's telling you that they can guarantee you an outcome, be very leery, because chances are they can't. The thing that goes most frequently with the guarantee is an upfront payment. Okay, the people who do this legitimately, housing counseling agencies, legitimate advisors, do not charge an upfront fee, right? So anyone who is asking you to pay them upfront to be able to do this process for you, that's a huge red flag. Don't do it. Take that money and put it aside to be able to satisfy whatever outstanding balance you may have on your loan. Whatever the past due amounts are, have those funds set aside to be able to address that particular situation. There should be no upfront fees that are being charged, because legitimate providers of this service do not charge upfront and they don't guarantee. The HUD, the Department of Housing and Urban Development, has a website. You can go on the website and look for, they'll provide you with a list of housing counselors in your area. Feel free to go there and pick a housing counselor you can reach out, call them up, and they can give you some real advice at no charge as to what the next steps can be for you in the process. But super important, don't make a bad situation worse by reaching out or having yourself be compromised by somebody who is a bad actor and really just looking to take advantage of your difficult situation. All right, when do you have to call a professional? There's some situations when it's time to say, okay, I've done the piece that I can on my own, and now it's time for me to get professional help in the form of a housing counselor or a real estate attorney. Everything that I've told you up to this point, you can do on your own. You can prepare the documents, initiate contact, respond to requests for additional documentation. Everything we've covered up to this point has been things that you can do on your own, and you can consult with a housing counseling agency if you need some guidance. If your request has been denied, it's time to now really talk to housing counselor to see if there are any other options that are available for you. If you are more than 90 days behind, it's also a good idea to talk to a professional. 90 days behind in Florida typically, and in a lot of judicial states, will have you on the path to foreclosure. So if you are as far as 90 days behind, it's time to really pick up the pace and start taking some action, because you're on the cusp of getting funneled into the foreclosure process, and that's not something that you want to have happen. And if you have passed the 90 days and you have a foreclosure date scheduled, for sure you need to be talking with a professional who can let you know if there are any steps that you can take to avert the sale date and get a handle on the situation so that you can keep track or keep hold of your property. In those cases, a real estate attorney or a housing counseling agency, and I always suggest reaching out to the housing counseling agency first, because they are a free resource for the most part that are available to give you a general overview of what your situation is and where you are and what you need to do, and then a real estate attorney if you need to really try to stop the process in the courts or take more of a legal approach to resolving the problem. Just always remember, you don't have to navigate this alone. All right, you're not here by yourself. You don't have to try to figure it out. There's always a housing counseling agency. There are resources available that can help you. Our office, our website has a ton of resources that you can access to help you document checklists, conversations, step-by-step templates to help you prepare for your call. So schedule a confidential consultation with me to discuss your particular situation. There's no charge, and we'll just talk about exactly where you are and what you have to do to get to the other side of this particular situation. The best way to reach me is to visit my website, simplyaskSharon.com. That's simplyaskSharon.com. You can schedule an appointment with me there, or you can just download our resources and get access to some tools that we've made available to help you. I hope that you found this information helpful. Again, I encourage you to take action if you find yourself in this situation, because not doing anything is a choice. And ultimately, over my 25 years of experience, I have seen that choice usually leads to the worst possible outcome for you. So stay encouraged. I hope that this was helpful, and I look forward to speaking with you at another time. Thanks so much for watching.